Uh, Hello everyone. This is our first, the live telecast, and I was getting a lot of, the request for going on the live because the lot of people wants to share their, the queries and their the question perhaps for related to the equity market. So friends, it's just the knowledge sharing kind of the live telecast, and we'll be talking about in brief about the what are the important areas where the market is really reacting on those things. So first of all, as you all would be aware about that, the FIIs are selling in a big time, and in September they all has they were taking it out their money from the Indian equity market. And the same time they were the selling it their equity or their cash exposure in the Indian equity market in the October in the first 2 weeks itself. So there are a lot of reasons which you already would be aware about that. The first one would be the rising yield prices, which is happening in the US also. So that makes a attractive destination for the FIIs or the other the foreign institutional to invest in the US itself rather to invest to the other emerging market. And being the India would be not be the the most performing market for in terms of the emerging sector, so they prefer to move out. So that was one of the reason why the FII were selling. And the recent one was like the kind of the debt related issues which has arises because of the ILFS case. So, friends, it was like the it has started with the mutual fund, which you all would be would have read in the newspapers or articles. It has started with by the panicking one of the the mutual fund, and they started selling the commercial paper, which is kind of the arrangement or the instrument by which the borrower can raise the money. So you can understand in the layman term, this is kind of the bond or the kind of the certificate against which the borrower can the borrow the money. There were a situation like the mutual fund were having the this piece of paper, and he were I mean it were to deliver the amount with the interest, but there were some panic that the particular lender might default on that particular payment, and that was the panic started. And that's how the mutual fund they sold it that paper. They were trying to sell that paper in the market with the higher interest rate. Like for example, they would be earning for example 6%, but they were offering the other person to take over this piece of paper or this amount in the higher interest rate. So that is how the panic started, and all of a sudden the market has started falling. And it has raised the concerns also, like the how come the credit rating agency who are giving the AAA rating to the ILFS related debt issues, and other NBFCs like for Divan Housing Finance, etc. So there was a like question comes like the how the credit rating agencies are doing their work. So in the over the period of time, the one point of time you are giving the AAA rating for them, and then suddenly it will be the junk category, and then the whole the LFS related the saga started. So basically what was happening, like mutual funds for lending the lot of this money which they were getting it from the retail investors or their clients, and they were putting it into the NBFCs, and they were lending it through the short term kind of the instruments. And once this all saga started for defaulting this particular debt, so all interrelated this debt market is started to collapse. So that is how the government has come and they stepped into, and then they started uh, uh, they've taken over the particular management, and the government has given the assurance that the liquidity will not be damaged for the NBFCs or the other area where the debt, whoever has the bought the debt instruments, so there should not be any liquidity crunch. And that was one of the reason, the why the RBI has not increased the rate. So as you would be aware that the interest rate, this is the kind of the monetary policy where the enough liquidities in the market is existing. So that is how the RBI go and increase the repo rate, and that's how they squeeze the liquidity. But after this all saga, there was already the liquidity crisis. So they opted for for not to increase the price. That was one of the reasons, not for the major, but that was one of the reason for not to squeeze the liquidity further. So friends, here now the if the FII are selling like big time, then who is saving the market? This is of course the DII. Now the DII or the mutual fund, you can say that they were having the big exposure in the NBFC's lending, and after this debt default started, so all their money will be on the liquidity will be a concern for them, and also the a lot of the liquid the instruments in the mutual fund, the people started taking it out. So they are also facing the liquidity crisis in the mutual fund industry also itself. But at the same time, when the FII were selling, the data shows that DI are buying. So there is a huge threat, which it seems after reading the newspapers, or considering the data which comes from the NSE each and every day. It says that the mutual fund industry also in a big the panic, or it's in a big the trauma kind of say. So they are also trying to get the maximum SIPs or whatever the investments are, so that they can it's a time to buy the stocks at the cheaper level. But that is how the FII are selling huge time. So if the DII would have not bought this, then you would have seen the huge downfall. So friends, so it's not something which is we are giving you any kind of image or any kind of the the forecasting per se, but it is just for the general discussion, and just wanted to have in the compilation what are the major areas which is to be kept in the mind for the going forward for. So oil prices again, it's going up now, it's pulling it down. So it's like it's not giving the headwinds to the macros for the Indian economy. And again, like for the rupee depreciation, it's happening. And as you know that FII, they are also having the currency depreciation is one of the issue. And recently the data also came, and because of the political in the elections are coming, so there will be a lot of volatility will be in the market. And and the political instability would be one of the factor which the FII are they are skeptical about that, and they are just holding their investment, or they might not come for the next some few months in the market, or they might be on the cautious stance for making any new investment, because the as the political change will happen in the coming in this 2019 election, there might be a policy changes and all, and that's how they are not keeping it, or they are not stepping into it. One other major areas we have to keep it in mind, like whatever is the financial services industry related, like for example whoever has the debts, and they have the given the lending to the NBFCs, or NBFCs now on the verge for the liquidity crisis, there might be a situation where the financial services industry will not perform in next 2 to 3 quarters. So this is something which is it's apparent from the news flows, and the financial services sector will be the the major area where everybody is and spectacle, or kind of they are taking the cautious stance for that. So so friends, now rates are it's very cheap, and there are a lot of sectors where the people are finding the valuation right, and they are just going and buying the particular stocks. So here the one message I got it from this, and he wants to know that where to invest. So this is something which is, I've already cleared that this is not something which we are giving any advice or particular opinion of any particular sector. But yes, if you compare with the their moving averages or their 52-week highs and lows, and you will find it that the lot of stocks prices are on the 2014 level. So just choose that wisely for whatever your your consultant, financial consultant, or if you are doing it your own, then you can do it, or you can make your portfolio. And one other thing was, just keep it in mind, like the FII or DIA per se, they are the institutional investors, so they don't go for the naked buying kind of say. When I say the naked buying, it's not something they just go and buy it. So simultaneously they will start, they do it their hedge position also. Like for example, they will be dealing into the futures also, and they will be buying some the options things. So for friends, that's something which is the retail investor might not be able to beat that, and maybe if at all he will not be able to beat the market, he will end up losing the money because he will not be having the downside protection which the this FII and DII usually have, because of the entering all the dealing into the this future and the cash market. Another question I'm getting it, it's saying that should we keep away from the NBFC? So friends, like if you, as you know that the LFS related is 91,000 crore is a debt which is on the stake, and they are defaulting on the interest payment, but the principal also to be paid. So now the what is happening, like government is coming and bailing it out. So that money also is a taxpayer money. Ultimately, that is something which will be happening in the future in the NBA, or might be there might be a time value of money involved in that. So there might be a short term crisis for those who are getting it bailed. So yes, you can assume that it will be the tougher, the time for the NBFCs, and for those banks also who are involved in the giving the finances to the NBFCs. At the same time, the mutual funds also, they will be getting it. They will be having the heat for that, because there are a lot of the debt which they have given to the NBFC. There might be some liquidity crisis related to that, or there might be a situation where the mutual fund will not be, they will not be renewing the debt which they have given to the NBFC in the short run, because they'll not be there now, will be showing it, or they'll not be, well, they now will be evaluating more on their quality size, and then accordingly they will be renewing their debt to the this industry. So another question say that the regulators responsibility is who responsible. See, it's a very debatable question, because now the question comes for, like who is responsible for these kind of situation, because nobody was aware of that, because you have a lot of compliance report which you need to send to the regulator as per as in the NBFC case. This is there is a RBI, and again, if it's a listed, then there is a SEBI also involved. At same time, you have the auditors also, and the other management commentaries, and also, I mean, it's not something, and the rating agencies also are there. So it's very difficult to understand. Suddenly what has happened. The 91,000 crore debt is some. Suddenly it has come on, put on the hold, and they are not able to service their debt. So this is something which is not able to understand, and the regulators might be taking it some serious action for what has gone wrong, and what are the the shortcomings of their particular segments. uh, uh, some one Another comment says that the how your how you can say that how long it will be lasting for these related to LFS. See friends, now we are in the situation where the political instability or the political uncertainty is there, and plus the macros are not that good, your fiscal deficit plus your currency depreciation, oil is also one of the factor, and same time this ILFS things is there. So there might be like next 4 to 5 months there will be a lot of instability in the market. So as you can all are aware, or you can read it through the system. So friends, in the next live session, we'll be arranging for where we'll be providing the the real time, your the heads up, or giving you the understanding about the options market. So how the option works, many of the times retail investor, they tend to lose their money in the option markets. Maximum would be in their option buying rather to the option writing, but the option writing would be the much riskier than the so we will talk about those aspects in the coming videos. And if you have anything else to know, feel free to send your queries to as per the email or given that. So thanks for this thing, and this is just for the prototype, or we just wanted to test for that, and we will come for the more these kind of live sessions if at all it's find it useful. So that's it. Thank you very much for, and hope it will see you again. Thank you.